Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be giving yet another session of Asian Session Live Market Analysis for the new week, 14th to 18th of October. So this is the third week, and we will follow the derived forecast under the levels and fine-tune using the market reading technique, and also use the trading strategy to limit the risk and maximize the profit. Then the webinar is given on 14th October, that is today, between 5 and 5:30 GMT. It is being recorded, and you can just follow it during the week with regard to the forecast and also the levels which are given. Thereby you will be able to find out how far you can make use of this forecast in your trading decisions. So first of all, we take the derived forecast, and the derived forecast is a statistical derivation from that of a sequential analysis, and which is considered as algorithm, and which gives the forecast for the intraday, daily, or session-wise, intraday, daily, weekly, monthly, yearly, and multi-years. But still, we need to fine-tune it depending upon the market we are trying to track it. So we fine-tune the forecast using the market reading technique to find out what are the type of moves they are making in 4 majors and 2 commodity pairs, and try to find out what trading opportunity provides at a given time. So ultimately, we use the forecast to trade at ease. So the basic idea of developing the forecast is to make our decision more appropriate as far as trading is concerned. So in a given market, in any condition, you come across there will be 2 opportunities prevailing. One is we can just do sell and buy trade once we perceive in the market that euro is going to drop. Or we can just buy at a given time, a buy, wait for further rise and sell. So what is the main objective of the forecast or the purpose of the forecast? That once you commit the position, the forecast, if it says that market has to go up, then your position should make profit. Similarly, if the forecast says the market has to come down, then you take a sell position, you should be able to book profit. So we follow the forecast in order to earn money from the market while doing the trade. So in a given condition, always the market perception varies. Some may say that euro is closer to that of the support, so it can go up. Some may say that it is closer to that of the resistance, so it can come down. Probably it may gain about 10 to 15 pips, afterwards it will drop. But nobody questions. Okay, when you say that 1.3535 is the support, then nobody says that the market can come up to that, or the market has to come down up to that of the low or the support level before going upward. And similarly, nobody questions who is bringing the market to that particular level and then taking it up. So in the absence of such information, the forecast is nothing but a guesswork, because we should be in a position to understand what is the intention of the people who are making the moves in the market. So if you do not understand their intentions, if you fail to recognize that they make the moves in the market, the circular trades, or they make up and down moves in the market, then it is extremely difficult for us to understand that we are trading against other men. So who are the other men? The other men, we can simply call it as players. But those players are nothing but the dealers in the bank trading terminals or in their dealing desk room. Beyond that, they don't have any money power or they don't have the courage to take a buy or a sell position because they also do the technical analysis and say that, okay, if it comes to that of the support and when the support is visible, then probably we can take a buy. Then when it goes to that of the resistance, we can take a sell. Suppose if the market comes closer to that of the resistance level, they will say, let us see whether it is confirming that not able to breach beyond the resistance, then later on we'll take a sell position. So they will be nervous while giving the forecast. But someone else is giving the instructions to them, come on, sell in the market in a big way, up to that of 1.3490 or buy up to 1.3600. So when such instructions come, they mechanically place the orders in the market and try to push the market. So who is that someone? The someone cannot be a single individual because no single individual can trade against a group of traders. So obviously it is a syndicate of the high net worth individuals. Their money is being used in the market to make the moves. Then besides, you come across another important aspect. Namely, the market follows fundamentals. When you say the market follows fundamentals, the fundamentals are being released from time to time from various countries. Now everybody is waiting for the outcome of the US shutdown, how exactly US government is going to handle it. And so when people wait for such fundamental information to be out, still you come across market is making the moves because the market cannot wait till such time. It has to make its own moves and the players need to make money. That is one aspect. Then with regard to the technicals, when you say that, okay, technically hero has to go up, but fundamentally something can happen. So when in every possible discussions, you come across the uncertainty, whether in this particular level, if I take a buy, whether hero will go up or come down. So we have to really read the intentions of the players. There is no other option than that. But people hesitate to talk it openly, and as a result, you come across they pretend following the technicals and the fundamentals. But if you go to the highly specialized analyst, they have their own methodology, and they simply call it as a system, and then trade if they are consistently making profit. And such fine-tuned informations are not available freely for that of the normal traders. My objective is we have to support the small traders because the small trader has got a real objective in the market that with a few $1,000s they wanted to, that is a hard-earned money, they wanted to slowly build up and earn some money in order to support the life. In such a situation, when they are misguided and when they lose the money, it is a real pain for such traders when their account is closed, etc. Suppose a millionaire lose about $10,000, he is not going to bother about it. A person who is making an earning of $3,000 to $4,000, and if he lose about $1,000 to $2,000, it is a real pain and it will affect his life system and also the lifestyle. And hence you come across in the trading platforms that they ask the question, in the event if you lose the money, whether it will affect your lifestyle. You simply say no. But we know heart of heart that when the money is lost and you will undergo a big setback. So with all the constraints, people enter into that of the market. And ultimately, what is more important for such traders is market trading should be very reliable. And also they should really get conceived the idea and also find that when they take the position, at least 70 to 80% of their trades should become success, earning money. Besides, if the trading strategy is being used, because I find hardly the trading strategies are being elaborated. But people say that in order to avert the risk, keep stop at the entry, but not the hedging ideas. How exactly the hedging can be effectively used in order to do either way trading. So, especially the small traders have to necessarily use the hedging order instead of the stop. Because if 2-3 stops are being hit, then they lose sizable amount and that will demoralize them. And so, invariably they go in for taking the mini lots and the micro lots and things like that. And it only makes them addicted to trading, not earning any money, what they envisaged earlier. So with all the constraints into consideration, I thought that on a weekly basis, I can give the expected market moves for the 4 majors and 2 commodity pairs. Besides, give the market trading technique, which will be very simple to be followed, which is nothing but a combination of various other technical analysis. But taking into consideration the players' intentions under the type of moves they make it, then accordingly, we try to see that when they are going to make an upward move, when they are going to make a downward move, and then try to take the positions so that the winning propositions will be at least 90 to 95%. So basically, we need to have the patience in order to wait for the good opportunity to come in the market to enter and exit, rather than simply commit a position and later on say that the market is really slow or sluggish, it is not making any move, and simply the market has discounted the news, etc. When you say like this, we are not really making any headway in our trades. Ultimately, we make our comments, we just post our blog or in the chat, we just share it with our friends, etc. But that does not give us the money. That is the main objective of entering into the market. So we have to really focus on the money earning process. Now for that money earning process, always keep in mind, forecast is a forecast, which can turn out to be right or it can also go wrong, because anything which is being discovered by human, you may not come across 100% success. There will be some failures or there will be some natural information which we fail to perceive. So in the process, what we need to do is that we have to limit the risk, because following the forecast, we try to take the position. We cannot take simply a blind risk, and we have to necessarily take a calculated risk and use the trading strategy in order to successfully make money. And also, in the event if the market goes against us, there are only 2 possibilities in the market. One, it can go up or suddenly it can come down if there is a trigger. In the event if we use the hedging order, then if the market comes down, then we should be in a position to earn money in the hedging side. And if it goes up, we should be able to earn money on the buy side. So that way, we try to perceive the market following the type of moves they do it in the market and try to consistently earn money. Now coming to the forecast part of it. So this is the 3rd week of the month. They are expected to make the continued trending move in the market. And one of the important aspects has happened in the market, namely the non-farm payroll, which was expected to be released on 4th, and follow up there are other forecasts, other data released. They are all being postponed to that of next week. Even this week, they are not going to release because they are focusing more on the other economic issues. So in such a situation, people could go in for more of a speculation and rumors. The players need to make moves in the market using the speculations or using the rumors. So in the absence of data release, don't think that the market is going to be subdued. They can always create rumors and spread it and try to make the moves. And sometimes what they do is they just make one big upward or the downward spike. Then everybody will question in the blog, forum, etc. What happened to that market? Suddenly there is a big move on the upside or the downside. Then everybody will get the information that there is a rumor in the market. So-and-so is trying to take action, or so-and-so is against the policy, or something like that. So they can always try to trigger the market, not necessarily with regard to the fundamentals or the technicals. Also, they can use the rumors, and they can also cite certain speculations and simply say so-and-so is going to be the Fed chairman. So immediately they can make an upward or the downward move. So they are capable of making such things in order to create the hype in the market. But ultimately we need to find that they are also human and they are also being controlled by emotions and they are also influenced by emotions. So ultimately how exactly they are going to trap the herd of traders? Until the herd of traders commit wrong positions, the players are not going to make big moves in the market. So simply I can say that euro has to go up without taking any position. If I go on say, euro may not go up. So various analysts might give various propositions and expectations of the market. But ultimately, traders committing the positions are vital. And based on that, the big moves happen in the market. That is why you come across most of the big moves happened on Wednesday, Thursday, and Friday. And very rare occasions, because of the event which has happened on Sunday or Saturday, they try to make big moves on Monday. Otherwise, they don't make any big moves on Monday. And invariably, technical analysts expect that gap to be filled. And so you find that there is a perception with regard to the market technically as well as fundamentally, but market try to mix both. So the next move, whether it is going to be based on the fundamental or based on the technical, you won't be knowing it. In order to minimize that uncertainty, I am giving the forecast on 14th of October. A rise initially to start with and then swing at a higher level. That is what you come across in the case of numerator currencies now. Euro has gained from Friday close about 25 pips. GBP has gained about 41 pips from the Friday close. Then again during the European session, swing and rise move is expected. Then during that of the European session, US session, they are expected to make a dip and then firm up slowly. So there will be a big beginning false move during that of the early part of US session. Then subsequently, tomorrow, a quick rise like today, they are expected to make and then slow slide. Then swing and rise move during that of the European session and swing and slide move during that of the US session. So you will come across more of a gain, say for example 40 to 50 pips gain, and a slide of about 30 to 40 pips. So that sort of moves they are expected to make till tomorrow. Then 16th, the penultimate date for the ultimatum, they are expected to make a swing and quick rise during that of the Japanese and the European session. And everybody will be thinking that this rise could be for a big drop. And they are expected to make the swing and firm up during that of the US session. And on 17th, after the gain, they are expected to make a small dip and then rise. And during the European session, a small dip and then quick rise and swing and quick rise during the US session. And everybody will say that the shutdown story is just discounted. Then people might freely take buy positions or to the gained level, but they will make a big drop or a dip on 18 and then rise and swing and firm up during the European session and swing and quick rise during the US session. And this Friday, you could come across the market could show much of an activity unless like last Friday, that is the previous Friday, wherein they made the subdued moves, holding at the lower level, and they have been buying. Those who have taken the long positions in Euro and GBP, they forced them to liquidate. For that, they made a small dip and then gain, a small dip and then gain. They have been holding around that of 1.59 area, briefly showed 1.60, then subsequently came down in order to buy. How? They have been holding low and just made a small dip or cut the low and then come up. And whenever the traders keep close sell orders, they simply absorbed it and again dropped. Then absorbed all the sell orders. Again made a small dip. Then subsequently after the drop, when the traders find that GBP has to come down further down or Euro has to come down, when they have taken sell position, they have closed it nominally, firmed up way, and they opened higher. So this is how, when the traders commit positions based on the market sentiment, the players act against them. So that we need to understand. Then next week, 21st to 25th, a lot of data are going to be announced, hopefully. Then it's the fourth week of the month. This time we come across 5 weeks. Then swing and quick rise moves are expected during that particular time, and we might come across aggressive gains in the market even before that, and then further rise in the case of Euro and GBP during the next week. With regard to the levels, the expected market levels in this particular week, Euro could show the low as 1.3500. So far they have shown 1.3520. And sometimes the interbank treasury take the low of the previous day and fix it. You may see that it has not come up to that particular level, but depending upon the trader's volume, they try to fix the high, initial high and the low for the week. This is being set in order to limit the players not to make more than 150 pips gain or drop. So net change come across is 27 pips, and so they can only drop about 150 pips negative net change or 150 pips positive net change. So there's the limitation fixed by that of the interbank treasury. Otherwise, what will happen? They can drop 1,000 pips or rise 1,000 pips Euro or GBP, and traders may not be able to withstand such moves in the absence of the hedging facility in US platforms, etc. So that is why they restrict the banks not to make such big volatile moves. So far Euro showed 1.3520, and it has got a potency to go up to 1.380 area. 3582 is the high they set today. And GBP could form the low 5950, and so far they have shown the low 1.5963, and 1.6375 could be the high. So far they have shown 1.5989. Sorry. They gained above that of the initial high and come down. Then in the case of GBP, 97.50, they could make a downward move again before making a rise. In the case of USD yen, the high could be 99.75, 98.35, they are shown as the high. Then CHF is expected to, it has made a downward move in a big way, briefly showed below that of 0.90 and accumulated all the long-term stops and then started gaining, and you'll be able to see that USD CHF is also equally gaining along with that of USD yen this time, and it has formed the low 0.9093, 9075 could be the low, 94.50 could be the high. Once it reaches 95, we'll come across big gains happening in 1 or 2 days to parity. This time they may not gain to 97, 98, 99 slowly. Straight they will go above parity. Then 0.9106 is the high they have shown. In Canadian dollar, 1.0325 could be the low. So far they have shown 1.0353 and they just cut the low. 53 is the current low. 358 was the earlier low. And 1.0370 is the high. And it can go up to that of 1.0575 on the upside. Then Australian dollar is expected to make the wide range swings, and it could form the low 94.25, and they have shown 94.29 as the low, and 96.50 could be the high. They have shown so far 94.53 and then 94.74. They already gained the levels. Now coming to that of the market reading. So even though the market appears very sluggish at the moment, you find that Euro formed the low 1.3520 and 1.3582 is not breached. And GBP has formed 1.5963 as the low, 1.5976 is the initial high. Then they have cut the initial high and staying above, and which is making about 41 pips positive net change. You know that GBP is the currency which is used to create the market sentiments. So last week they just made 200 pips drop in the case of GBP. Everybody became cautious and astonished to see that the market turned bearish. Now they gain more in the case of GBP and compared to that of Euro. And GBP is holding above that of the initial high. It is expected to continue to gain in this week. So we can do a technical trade of buy above 1.5976 and keep a stop below 1.5976. And once the position makes profit, keep stop at entry and it is expected to go up. You can just watch during the day and confirm it. Then USDN 98.14 is the low, 98.35 is the high. They are not breached the lower high. Then CHF 90.93 is the low. 91.06 is the high. They have not breached the low or the high. Canadian dollar 1.0358 was the initial low. They just breached. And then they are staying below there for more than 30 minutes. They are expected to come down to 1.0325 or 15 level and then start gaining the levels. Then 1.0370, in the case of Canadian dollar, they make either way stop and slowly gain the levels. Either way stop and then slowly gain the levels. There is a type of move they are doing it. Then Australian dollar, big rise and big drop are the type of moves in order to make it as a wide range swings. And the low is 94.29 and the high is 94.53. They reached comfortably and formed 94.74 and holding closer to the high. And they are expected to go above 95 this time. And last time they went up to 95 and then dropped 95.22 and then dropped to 93 area. This time they are expected to take it to 96 because people try to draw the lines from there of the peak and say that supply is going to come there and try to take the sell position. They will make it upward move. So they create the market sentiment and act against and convince the technical analysts to take the positions afterwards, try to trap them. Because the traders are not committing positions, there's no point in making moves in the market. So with regard to the market reading and trading, so we use the live market quote page and note down the initial lows and the highs around 3:30 GMT in the case of 4 majors and 2 commodity pairs. And when the market is closer to low, we try to take a buy. Or when the currency is closer to high, not breach the high for more than 30 minutes, we try to take a sell. Otherwise, if they just go above that of the initial high and stay above there for more than 30 minutes, or go below that of the initial low and stay below there for more than 30 minutes, we know that they will either make an extended downward move, that will be a quick move, or an intentional downward move. That will be a slow move. Every 30 minutes they cut the new low and make a downward move. That is what happened on Friday. And then we can take a sell position and book profit as an intraday trade by following the stop and false move, extended move, and the intentional moves. Then whatever be the decision we take, we keep 30 pips stop or the hedging order. And once the market makes favorable moves, then we try to keep stop at entry. Once the profit of 25 pips seen, then we try to keep the limit order around 45 to 75 pips. And or near that of the high to start with, and move the limit order of the take profit order, and also move the trailing stop to maximize the profit. So always keep in mind your equity is limited. So without hedging order, you cannot take any position because market has got a potency to make an upward or a downward move for about 100 to 150 pips, which you may not be able to withstand. When the market appears subdued, you might be tempted to take more positions. But when they gradually increase the spread between the high and the low during the day, then it will really trigger the emotions. So instead, you anticipate that they just keep a narrow range swings to start with, then gradually increase it during the day. So when they increase it in a very big way, then you can try to commit another position in the averaging process. So that way, if you try to keep your mind prepared, then you will not face any uncertainty, or also you will not get the market fear. The market fear comes because of over trading. When the market is making swings, you think that, okay, 20 pips below, it has made a new small dip, then take another buy. Another 20 pips drop, you take another buy. Another 20 pips drop, take another buy. When they make 100 pips drop, all the position makes loss and you get the margin fear. So the fear, the causal factor for the fear is yourself, not the market. So you have to understand that because we, out of greed, try to accumulate more positions without understanding whether we will be able to withstand so many positions at a given time. And we fail to think that if the market goes against me for all the positions, how I am going to handle it. If you have got the contingency plan, fine. If you fail to have a contingency plan, then you go in for distress trading. Simply cut the positions and stop it out and just take a reverse position in order to earn back. All those things happen. Ultimately, you will ruin your account. So don't take emotional decision. If you go to any psychologist or anybody who is experienced in this world, if you ask them whether any emotional decision has become a right decision, they will simply say no. Any part of the world, if you take emotional decision, which will not turn out to be a right decision. Now, coming to the market timings. Now, these are all the three sessions, Japanese, European, and US session of the market. And each session is subdivided into early, mid, and the late sessions. The early and the late sessions, they handle the majors, and the mid sessions, they handle the crosses. And in between the sessions, you come across the gap time, and that is being used in order to make stop-ins or the false moves. Now, this particular timing is valid till 26th of October. Then 27th onwards, that is 26th of October is Saturday, 27th is Sunday. From there, Europe is just switching off the daylight saving system. Currently, it is on. So they will switch off the daylight saving system. Then later on, you will come across modified times. And once Europe changes, I'll show it in the next slide. I'm just giving it beforehand so that you can plan accordingly your trades. Now from 27th, that is Sunday, and actually the market starts on 28th October. From that time, you find the Japanese session will be extended from up to 7:30 GMT. So late Japanese session will be 6 to 7:30 GMT instead of 5:30 to 7 GMT. The gap time will be from 7:30 to 8 GMT. Then the European session will start by 8 GMT. But US will be still on daylight saving system. So you find that European session will get reduced by 30 minutes. Then US session timings will be as usual till 3rd of November. Then from 4th of November, we find both Europe and 4th of November, both Europe and US will switch off the daylight saving time. As a result, they will use the standard time. Then Japanese session will be from 0030 to 7:30. 7:30 to 8 will be the gap. 8 to 14 GMT will be the European session. 14 to 14:30 will be the gap time. Then 14:30 to 21:30 will be the US session. 21:30 to 0030 will be the Japanese session. So as far as Japanese session is concerned, there will be 30 minutes gain. And as far as European session is concerned, they initially lose 30 minutes and gain 30 minutes. So as such, it will be there for 6 hours. Then US session will lose 1 hour but gain another hour. So we don't come across with regard to the spread, the duration, any change, but the gap time gets reduced. So these are all the timings. So let me show the slide slowly so that in the recording. So till 26th, next week, we will be following this particular time frame as the session timings followed by the other players. Then from 27th or 28th of October, we will find European session will get extended or get reduced, and Japanese session will get extended by 30 minutes, and US session will remain till 3rd November as usual in the daylight saving system. Then afterwards, from 4th of November, we'll find the new standard time is going to be followed in the market. So during the transition time, you'll find that the market might make some subdued moves. This part of the game, that will be the closing of October and the starting of the new month of November, but they are expected to make some subdued moves during that because the people need to commit more positions. When the system timings changes, then traders hesitate taking decisions in committing the positions, and invariably come across the market becomes subdued during that time. So let me answer to the questions which are asked here. River has got a question. Can we expect also rise in stock this week? Yes, stock market is also stock as well as commodities are expected to gain the levels. Then Chow Kiat, do you expect Euro GBP class to go higher levels before down? As far as Euro GBP is concerned, it has come to about 84 level, closer to 85. From here, it is expected to make the drop. So probably a brief upward stop, and they may just show it 85 level and start making the drop, because already they had done this move, more drop in the case of GBP, and so they are expected to make more gaining moves in the case of GBP. Intraday, a small variation might come across between Euro and GBP with regard to the net change, but GBP they are expected to gain more levels from this week. As a result, when Euro is not gaining more, GBP is gaining more, we will come across more slide in the case of Euro GBP cross. In Jakub, when hedging brings a profit, what should we do while the original position, which makes a loss then? Okay, I think you have not listened to my trading strategies using the hedging order. And if you go to my trading system available in fxtrade.net, there I explained how exactly the hedging can be used for either way trading. So market cannot continuously drop or continuously rise. So in the event, one possibility, when the hedging is making profit, we can keep stop at entry in the hedging and identify the type of move. If it is an intentional move for 2 sessions and the start of the third session, then book profit in the hedging and keep another hedging order 30 pips below the book profit level. And once they reverse the market and start going up the next day, you trail the hedging order upward, and when they go up above that of your buy position, keep stop at entry in the buy position and remove the hedging order and try to book profit on the buy side also. That is one way. In case you find that market is making a big drop and not reversing at all, you can just accept a loss, say for example in the buy position, 70 pips. Imagine 70 pips loss in the buy side. But your sell side will make 40 pips profit because you use 30 pips hedge order. So if the market drops another 30 pips, you will be in break even. If they drop further downward, you have got a higher level sell position to make further profit. So you need to find out what type of moves they are doing it in order to take appropriate decision using hedging. And simply, if you say that hedging is useless, that means you do not know how to make use of it. If you really understand the trick of the trade, then you will be able to really appreciate. Suppose somebody is not aware how to drive a car, and if he says that, no, the car is of no use because it may encounter accidents, and he will try to travel in public transport. There again, he may say that it can also encounter accidents. So if he just magnifies with regard to the accidents, he will not be in a position to learn properly how to drive a car. It is a question of learning an art. So trading is an art. You have to learn it and perfect it, and then it becomes a child's play for you. So when you are driving your vehicle and you talk to somebody or you attend to your phone in a Bluetooth device or something like that, and you don't really worry about which gear I am in or in what speed I am going in. You don't monitor it continuously. You only monitor the road and try to avoid any mishap and simply drive at ease. In the same way, you should be able to do it in trading. So for that, you need to master it. And that is not difficult. It is not only the high-profile people can do that. Even an ordinary trader, as long as you have got the capability of learning, you should be able to learn it. And I have given it in my trading system, webinars which are being recorded by FXTrade and displayed in fxtrade.net under my profile. If you listen to that, you'll be able to understand all the trading strategies I explained there using the hedging. Mohan Kumar, Euro Yen, what will happen in this week? As far as Euro Yen is concerned now, Euro is showing 23 pips positive net change and USD Yen is showing 30 pips negative net change. They are nominal downward move. So only when they make the contrarian move between Euro and USD Yen on the upside or at the downside, then the greater potency of making profit will happen in the case of crosses. So now you look into the other market, Euro, GBP and Australian dollar are in positive net change, almost zero here. But in the case of denominator currencies, USD, CHF and Canadian dollar are showing negative net change. When the numerator is showing positive net change and denominator showing negative net change, that means they are making the USD weakening move. So when they are making USD weakening move or USD gaining move, you don't come across much of a swing in the case of crosses. Hardly the net change in the case of crosses will be about 15 to 20 pips or 30 pips and things like that. You can look into all the crosses. But only when they make the contrarian move, make positive net change in the case of euro, positive net change in the case of USD then you will find the double edge effect of the cumulative or the addition of both the pips, you will come across the case of crosses. So always when you want to go to the cross trading, find out that they are making contrarian moves during the mid sessions and then try to commit positions so that you will be able to make money. But as far as the forecast is concerned, Euro as well as USDN are expected to gain the levels. Initially, USDN is expected to come down, then later on gain from midweek. At the time, when they are making an extended downward move, in the case of Euro Yen, you can commit positions. You commit buy positions, then it will go up. Is the trend or same for every 3 weeks of the month? It is only for this week. The trend is actually the market trend is set by that of the players from that of the second week till the last week. And it might appear uncertain, but they set the trend like that on the upward or the downside. Now what happened in the market, a long-term uptrend is set by that of the players. They are accumulating the buy position. They have done prolonged downward consolidation and prolonged lower level consolidation with a downward stop in order to accumulate more positions in the case of Euro and GBP. And in order to book profit, they have to necessarily gain the levels and book profit. Once the traders become bullish and freely buy at any level, then they will book profit. So that is what they intend to do. So in a given day, as an intraday trader, always try to take a buy near that of the low, not after the rise when they are near the high. You can buy as a technical trade if it stays above that of the initial high for more than 30 minutes. Otherwise, when it is closer to that of the high or the closer to that of the low, only you can initiate the positions. So till December, they are expected to make upward move in the case of Euro and GBP. Then CSE. GBP already made a gain of about 40 pips. Must we wait for take a buy? As I explained, when they make a small dip during the late session, because it is a mid session now, the time is 5:48 GMT, and so they start of the late session from 5:30 to 7 GMT. So then they will try to make a small dip before making further rise. The dip will be up to that of the initial high. So around 59, 78 or 76, you can take a buy. Then they will make a rise. Is GBP USD in bearish or a bullish state? Okay. As far as I am concerned, I don't develop a sentiment as bullish or bearish because a drop of 30, 40 pips or 60 pips or a gain of 30, 40 or 60 pips is not bullish and bearish. Even 200 pips drop. It is a question of only the type of moves they have done it in order to reverse. As I explained many times, that they make the intentional move for 2 sessions and start of the third session and then make an extended move for 2 hours. Then again an intentional move. So they alternate the move. That means they alternatively trap the traders who become bullish and bearish. If they trap the bullish traders on Friday, then they will try to trap the bearish traders on Monday, Tuesday. So where is the question of keeping a prolonged bullish and the bearish field? In Mohan Kumar, USD weakening move is happening, so Euro may gain more. No, not necessarily 150 pips. It depends upon the volume. So they are expected to gain the levels in the case of Euro as well as GBP. Okay, no more questions. So I'll wind up the webinar. I have taken some extra time. I'm sorry for the same. So I take this opportunity to thank FX for the facilities provided to present the webinar, and also you people who are kind enough to come here and listen with interest in order to improve your trading system. And if you've got any questions, you can just ask me in the blog, inoindices.com/blog or in fxtrade.net. And there, if you ask the questions, I'll receive the emails, then I will reply to those questions with regard to the live market conditions, what is actually happening, my perception, I will try to give it. Then you can follow and also synchronize with your perceptions and try to take appropriate decisions with regard to the pending position or the holding position or trying to take a new position. So wish you all happy trading. Then I'll come back on Thursday, October 17th, and try to take yet another session of Asian Session Live Market Analysis review what I have given it as a forecast today, and try and also the levels, the forecast as well as the levels, and find out whether the market has followed them or totally deviated from them, so that we'll make an objective analysis of it and try to find out how we can make use of this forecast. Thank you one and all. See you on Thursday. Wish you all very happy trading.